right? What's the typical salesperson's in a new role odds of success? And if that works out that way, how much cash are you burning before you start seeing the results of those salespeople, right? Or if none of them work out, where does that leave you as a company? Because these are decisions you might have to think about, 6 months down the line when like, oh my God, we're going to run out of money and our sales didn't kick in, right? So thinking through that decision-making process. If you're launching new products, right? Your forecast, are you expecting to cannibalize your current products, right? How does that all work together? Are there upsells, or if you're a SaaS business, knowing that the best outcome of churn is actually net negative churn, where yes, you lose customers, but your current customers grow faster on a revenue basis than the ones you lose, right? What are all these aspects that allow you to make better decisions to run your business?
Yep. I think it makes complete sense. So let's dive a little deeper onto that. So in terms of every company is different. We work with a lot of different companies. There are different sizes. They have different headcount. They have different complexity internally, externally. When you built out Nomad and where we are now and where we're going, how do we work with different companies? Like dive into how we can work with different size companies, what we do for those different companies across services. How did you think that through when you were building and scaling, and also now and as we continue to scale?
Yeah, so I think there's two things there, right? One is I always talk about our origin story, what led us down this path. And then the other aspect is like, how do you actually work with these businesses, right? Or as a financial professional, what does it mean every time you get into a new business to work with them? Yep. So for us, on the Nomad side, right, we start off doing CFO advisory, right? It was a role I was living and doing that we knew founders needed help on, right? Most founders are very cognizant of the pain points they're going through. Yep. The problem they run into is finding a solution for it, right? And a lot of times you'll turn to your network to find that solution. You'll ask people questions, but if those people don't know the real answer, you can get bad advice. Yep. So there are companies that I've worked with before where for 9 months someone was telling them to hire a controller, but they didn't need a controller. Their accounting was pretty simple. They need someone to come on an FP&A side to help them make decisions on the future of the business. You didn't need somebody doing a more accurate job of counting what's already occurred, right? And that difference of accounting versus FP&A is people think about the function, right? So we initially solved the piece for this leadership strategic piece, going into being a partner to these businesses.
Yep.
Following that, we started, suddenly you're the CFO of a number of businesses, or our group was, and we were looking at the options on the accounting side, and having done this for a number of years, having worked at ISC, having access to lots of strong accountants, and even building, bringing people into an accounting group out of school or out of other jobs where they'd never done it before, you have a pretty good feel for what good and strong accountants look like. Yep. Versus what was available, and you found that there's a huge gap in the market where your larger accounting firms, your top firms, didn't want to touch day-to-day accounting, and for a number of good reasons, right? Their focus is on audit work, tax work, advisory, where their bill rates are incredibly high, and they're not staffed or structured to take on this day-to-day piece. So suddenly you're looking around and we're saying, okay, what's left? You have these mom and pop shops, many of them, they don't think about having the structure in place so that they're really ensuring quality work where you have two sets of eyes. Many times they're dealing with business models they've never seen before. Yep. Right? Very specific accounting structures that we see all the time, that folks who've lived in the startup world do see all the time. And we were, or you saw these online platforms where they're phenomenal products if you're a very small business who's relatively simple and doesn't have a goal to become this massive, a massive high growth business. Great, you can go to the Bench.co's of the world, or the BotKeepers, or Indeniro, where these guys specialize in low cost accounting. They cover your taxes in it too. It's on a cash basis, so not an accrual basis. So for those who don't know the difference, on a cash basis just means your books, like in the month of January, or you might not have sold anything, but maybe you received $100,000 in cash for things you sold before, and you didn't have any expenses, you didn't pay any expense that month. It would show a $100,000 profit for that month. When on a P&L basis, on accrual basis, what was really getting measured is what's actually occurred that month, and then separately you have your cash flow statement, your balance sheet, that tracks those other elements. So it's a more complicated way to track a business, but it gives you a much more realistic and accurate aspect, and it's more consistent with what investors expect, and that's why we do it. That's why we do it for the companies we work on. So suddenly you're going, shit, I don't have any, pardon my French, but I don't have any options, right? And I'm not going to rely on somebody I don't trust, so that's when we hired Julia Cuminato. Congratulations, Julia. She just had her first kid. I'm very, very excited for her. Congrats. So we brought Julia on. I sold her on a vision, which for all founders, your early employees are buying vision more than anything else, and she helped us launch the group. And it was amazing. We started doing that, and then over time, another pain point that we hit was a number of our tax partners started also kind of outgrowing the kind of clients that we were working with on the early stage, right? So the later stage guys they overlap with, but I understand if you're a big firm, you don't want to take on accounts who their annual fees that they're paying you, or if you're a really big company, it's sub $5,000, it's just too small for you, right? Or sub $10,000 really. So suddenly you have clients that are either going to be the smallest, clients of ours who when they work with a tax firm like that, they're the smallest client in that firm's book, so they're kind of getting ignored, and they're getting junior level workers, or or they're just getting rejected altogether, and we didn't want to send our clients to, again, mom and pop shops, one-off CPAs whose work we couldn't confirm. So we launched that business group ourselves, and now just finished or are about to finish on October 15th our second full year tax season.
Yeah.
And that's kind of the origin story of Nomad. But on the, and why we kind of kept going down that path for, working with different companies, I think you hit the nail on the head earlier. You mentioned the fact that you have a lot of, a lot of unique situations, right? Every company is different, right? From how they're structured, the skill set of their founders, all the way through the industry that they're in. And if you're going to work with these different businesses, it's up to you to tailor your approach specifically to their needs, right? And if you think of a CFO as anything, and you picture a football field, and then you have the teams, you have offense, you have defense, you have the quarterback, you have safeties, linemen, all these different roles. The CFO really isn't the person on the field, right? The CFO is really the manager on the sideline calling in the plays. They know who's responsible for what, right? And they might go, I don't have a wide receiver right now, I'm going to go get one, right? So that might be if you're going internationally and you need an international tax expert. It could be that you're going through an audit, you need to go through an audit as required in your documentation with your investors that they've required as part of the terms of your fundraising, and you've never gone through an audit before. They will know which firms to go approach to get different bids, so you can bring in audit firms, right? So that's the role that the CFO really should be playing. And if you think about what a coach does on the sideline is they're tailoring their approach for every opponent, right? So if you're one of these coaches that approaches every game, you're going to run the same plays and the same system, and not deviate based on the strengths and weaknesses of your opponent, you're going to lose. And our CFO is the same way. If you don't alter your approach and tailor it to specific to that company, you're going to fail. And I think that's how we really think about high growth finance.
No, I love it. I love kind of that usage of the football field.
So I couldn't go lacrosse, even though Nick's a lacrosse guy for everybody.
I'm glad he didn't.
And by lacrosse, I mean he played at Penn State. You're not going to let me. I'm going to get this out. Played at Penn State, top program of the country. You started as a freshman, right?
Did.
Yeah. So of the two of us, I'm clearly the far superior athlete of.
Unless we get on the basketball court. But to go even further, I mean, there's a lot of people who, when they think of a Nomad or other things in the ecosystem, like you mentioned a few. Sometimes it's like, do I outsource it all? I already have a CFO in house. I don't need you guys. But like, as an early stage founder approach to this, when do you need? When do we like to recommend a full-time person, finance professionals? Versus a Nomad where we can take care of everything, but a lot of time we can supplement work.
Well, at any stage of building a business, if you look at your finance team, this is not just unique to the finance team. There are certain things that people do at different levels, and you might need someone to come in and pay your bills and do AP and collect your invoices on AR. You may need them to do some reconciliations. You may need someone to come in and as your business is changing, know the proper accounting rules around say called SaaS and revenue recognition based on where you are, or it could be that you need much more strategic help. And the challenge you run into is I think a lot of people hope to find the white whale that could come in and do everything, right? And so sometimes they'll struggle, and you might even see this in other parts of the business, whether it's marketing or sales or even development and engineering, where you're trying to hire someone to do everything. And the reality is, if you hire somebody senior, they don't really want to do that low-level stuff. They might do it for a bit because they're bought into the vision of the business and where you're going, but they don't want to do it too long. Or you hire somebody who's more junior and they're not really capable of the more senior level stuff, and so you struggle in a lack of knowledge. And so our recommendation is always find a way to get the stack you need and then fill it in as time demands, right? So as a role, if you're a really busy manual entry business that has lots of invoices going out, and a lot of heavy work there, a lot of hours. It may make sense that you hire somebody full time to do that. And maybe they spend the bulk of their time doing that and they can put in some other time to other areas of the business. You don't want them getting bored. That's also a risk, right? Because if you force feed people into roles and they're bored, they're going to leave, and you run into this issue with constant churn on your finance team, right? And loss of knowledge every time. So you're really like, who can we hire to supplement that piece as we need it? And then, as each part of the stack grows in need and demand, then you fill that. And a lot of times CFOs early on, they're not just in charge of finance. You give them real estate, you're giving them HR. There's a lot of other roles that can sometimes land there. Sometimes they land with the COO, right? A lot of founders end up being in that COO role and owning operations, and those pieces can fit there. So again, you're tailoring a solution to a business, and as a founder, you're tailoring your solution to your needs. Right? There's no one way to do this. And the key is to figure out what's the most cost-effective way to do it right? And that's a piece people also will get hit on later, right? Where if you ignore this and you do it wrong, or you hire the wrong people and they're not doing a good job, whether it's full-time or part-time, that suddenly you're going to raise a round of capital, it's your most cash-strapped time of your business's life. And the numbers are wrong. And you don't want to go to these new investors and suddenly after you raise a round, go, hey, guess what? I know we're just building trust, but our numbers changed pretty dramatically. So you got to solve it beforehand. And suddenly you're cleaning up a year or maybe even 2 years worth of data. It's really expensive. It's always harder to redo it and to fix it and to make adjustments and do it right the first time. And you're doing it at the worst time period from a cash position for your business. So you get stuck in these hard places. And these are the steps that when people start thinking ahead and looking forward, you don't want to be penny wise, pound foolish. Like, you could easily go out there and find somebody on Upwork or another platform, a really cheap bookkeeper who lives on the other side of the world. But I'll ask you this question: if you're doing that, do you have the capability of vetting them as a resource to know what they're doing? Do you know what questions to ask them? Do you know what skills they need? Do you know how to check their work to make sure they're doing it right? Because if not, it's going to be much, much more expensive later on.
Yep. And you already kind of took care of the question around mistakes. So I think that covered a lot of it, and it kind of ties into the next one of just understanding your business, especially around metrics. Talk about how, from your perspective as a founder, how important you think that is for founders to know, why that is, especially as they're making decisions in their business and kind of pulling different levers.
Yeah, I mean, when you go back to decision making as a founder, as an executive, and leveraging your financial model, operational model to do that, right? Because I think that's the core piece. And sometimes you do one-off analysis. You might do pricing studies and A/B tests to understand, like, if we increase price, what's our conversion, how those things play against each other. But for the most part, you have this operating model. And in it, you're going to have only so many key levers for a business, right? And knowing those key levers and how they're performing will really dictate how you're going to do as a business, the scale at which you're growing, how investors view your business. Do they believe in you, right? So both, things investors will look at if you're growing, is it organic or is it bought? What's the math on that? If you're a business that requires both, you can compare the LTV of, the lifetime value of a client versus the cost of acquisition. You can compare those things. These things that people look at, but it's also the core levers. For some businesses, those levers could be the number of users that come to the site, and then off that a certain conversion to people who pay if it's a freemium model, or even if it's if it's e-commerce, so you'd be looking at the average dollar spent, right, in a per purchase, right, in a cart, your average cart size that people are completing. So you have all these elements that matter, and it really depends on each business. But as a founder, you really got to know those levers, right? And it shouldn't be a list of 15 and things you can't remember. It's really not that big. But it should be a list that you can definitely own. You can memorize. You don't want to walk into a meeting with people and not know those things. And then on top of knowing your key financial positions, right? How much cash is in the bank, your monthly burn, core revenue. Those things on a financial basis also matter. But it's really, what are these drivers and where's your business going?
No, that's great.
And if you're missing your targets and you would spend against those targets, that means you need to pull back spend. If you're growing fast in those targets, you might go, okay, great. What can we do to grow faster? Maybe this is an appropriate time to think about spending more or not. Maybe your burn is still at the rate you want to be at as you prove out a model. There are a lot of companies that would look like hockey sticks, and they raise a Series A, and they look like hockey sticks, and they raise a Series B, and suddenly they don't look like a hockey stick, right? And every dollar matters. So it's really, people think about businesses doing this, but in reality, it's like you grow and you hit a bump and you flatten out sometimes, and you got to grow and hit a bump. And sometimes for companies, it's a really big growth before they hit those bumps. But they're real, right? And most businesses go through them. And there's a number of, even in New York, a number of classic startups that are consumer facing where people felt those changes that the businesses had to go through, right? You have a company like ClassPass that changed their business model while they had hundreds of thousands of users, tens of thousands, if not hundreds of thousands. And a lot of those people, going from a pricing change where it's unlimited to a fixed number, right? A lot of people got upset, and they actually did a phenomenal job of managing that process. But it was a big step they had to go through to break through their next level of growth.
Yeah, no, that's a great example. It's a hard question because, as we said before, everyone is different in terms of company. But walk the audience through a typical Nomad engagement. Across services. I'm making it hard for you.
You are making it hard because
as things go, and people are like, okay, so who is Nomad? You have all these different services. How does it all fit? You have this full stack, and you kind of plug and play. Like, walk through a company that's been with us maybe from a seed all the way up to like a Series B. Like something. How do we evolve as companies go?
Yeah, again, I think it comes down to the needs of the business, right? Early on, when you're working with businesses, and I'll talk more, not even just Nomad, as a financial professional, right? Having done this with a number of businesses. Early on, the team's small and light and nimble, right? So even when I was a solo consultant or at Vimeo, we had a really small team, right? At one point was Vimeo, you can picture how we still had tens of millions of users, and our accounting team was one part-time accountant, myself on a full-time role, and then eventually I added another resource to support the finance team, and then another resource to run our FP&A. We built, you slowly build a team as the company needs it, and as my time disappeared. And so I think when it's that same process as a business where we kind of come in and bring part-time resources, early on, and we may be their entire finance function. And over time, it gets added to, and you're supplementing around it. It may be that they've hired a full-time finance head, maybe a VP of finance, maybe a director of finance. But that person might not have ever gone through these audits before, and they can leverage one of our CFOs to stay with them every year when they go through these audits, and then even double check the close. If they've raised debt financing and they have, part of their covenants is that monthly reporting, that those are things you cannot get wrong, right? Because if you screw up your debt, you miss covenants, like they can take your business, right? There's a certain amount of risk already built in that business. So providing help on that is a pretty big deal. And then even you think about tax, right? Tax early on may just be pure compliance. Maybe great, you're in one state and you have your annual filing there, and you have your federal filing, and then suddenly, based on your business model, maybe you have to worry about sales and use tax. You have to do nexus study in these states. You're looking at growing internationally. And so what are the steps you're going to take to mitigate tax liabilities as a business and make strong decisions? Or you're getting bigger and you're moving towards an exit. And one of the worst things somebody can do is start thinking about, especially as a founder, their personal tax liabilities and the business tax liabilities when you're like months out from an exit. When some of these things you should be, especially on the personal side, preparing for much earlier, right? Where is your stock being held, right? There's plenty of financial planners that we know, that we work with, who specialize in working with individuals who know there's going to be some exit, and maybe it's after Series A, maybe it's after Series B. Thinking about a trust, right? Thinking about what you're going to do personally. But if you wait until right before, it's usually too late. And as a business, while there are times that you can make certain decisions, and Stephen, who is our managing director of tax, there's plenty of stories where you dig and do a lot of research, and you find ways to save hundreds of thousands of dollars in tax liabilities. That doesn't always happen so late. When you can start earlier and make sure the structure you're picking is correct, and the process you're going forward, whether it's an asset sale or a full stock sale, what that would look like.
Yeah, no, and I know we're running short on time, so I wanted to dive into some of my last few questions. As a founder,
I'll consider answering them. I may pass. Do I have the right to pass on these?
So in terms of like a founder yourself, like you wear multiple hats, especially at the start when you're smaller and you're getting going. Like, how do you manage your time? Make sure you're balancing things the right way personally.
Yeah, that's a great question. One thing that comes to mind is you have to sometimes say no, right? Early on, when you're building a company, you kind of say yes to everything. And my friend Dara, she just wrote an article about this. She got rejected by Brene Brown, and for this project she's been running, where her goal is to amplify the effect of everybody kind of spreading kindness through acts for others. And it really doesn't take, it's exponential growth. If you do it for 30 people and then they do it for 30 people, it really grows fast. And I think Brene Brown's team sent a very amazing, rejection letter. It really was. It was like a rejection letter without rejecting. It was saying, pretty much, I have other commitments that I can't step away from. Family, right? The business itself, maybe growth and growth and sales expectations to hit, and saying, I got to hit these. I have to do this first and foremost. I would love to support that person. Sometimes you get emails and people are just asking to pick your brain, and it's hard to make time. So I think being willing to and knowing how to say no is a really important first step. I'm very big on productivity hacks. I think it's something that at Nomad we take a lot of pride in. Mark has been big on. He's even put videos out on his blog, everywhere from Gmail shortcuts to setting up your email so that as you go through emails and archive them, it doesn't go back to the inbox ever. It's really just going email to email. These are all aspects of kind of productivity hacks. I even know when I get to a certain point of the day, a lot of my emails on faster on my mobile phone, so I'll just go sit down on my phone and swipe through and archive really quickly. So I'm literally trying to manage my day as much as possible. And the other thing is as a founder, and this was really, really hard for me, and I'm sure you can even attest that this is an area of growth for me, was not just delegating decision-making to other people and as you grow your team, but emotionally stepping away from the decision to let people, succeed or fail on their own, and helping them okay, we failed there, let's try again, right? And as long as you're not feeling the same way over and over again, that's how you can support your team. But really emotionally removing yourself from that decision making, and only when it's really important, and only when they want to come to you and say, hey, I need to pick your brain on this, right? And being able to let those things go and defer to other people. Now, of course, early on, you've got to provide guide rails for people, so you help them build those rails, so then you can kind of step away, right? You wouldn't teach a kid to ride a bike, and not that all of your employees, and I don't know if you guys could hear there's like a fire alarm over speaker going out that's going all day, because apparently they always need to confirm every 20 minutes of our building whether the fire alarms work. But to go back to the analogy, it's not like you would teach a kid to ride a bike by throwing them on the bike and then letting them go and let them hit the corner. You're going to go run up next to them, and maybe you put training wheels on it first, and they get used to it and you pull them off. I think with management, you're trying to do the same thing. And it depends also on somebody's expertise, how long they've been doing it, their experiences, and where they're coming from. Because it may be that they're very experienced, but where they're coming from, they do things differently, and they need to learn your culture and your company's way of doing things. So I think that as a founder, being able to successfully delegate and then emotionally step away from decision making is really challenging, but really important. Yeah,
it's kind of finding that happy medium of both.
Exactly.
Another question as a founder, to help other founders who might be listening. What things keep you up at
night? The analogy I love to talk about is, and this is one for Mark, which is when you think about when you start a business, you're like a building and you're up a floor, and then you're doing construction on it, and you have a safety net on the second floor, and if you fall, you don't fall very far, right? If you start a business, your payroll is $5,000 a month, you can throw that on a credit card, right? It's not that hard to get that kind of financing. You go to a friend and go get $5,000. But now suddenly you're up 10 stories and your payroll's $200,000. There's very few easy and quick fixes for a $200,000 payroll, right? And so I think if you think about it from a business perspective, you think every time you grow, you're assured of more success. That's not true, right? The stakes are bigger. And they say as being a founder, you have to find the ability to balance this kind of duality of opportunity and the stress of the position in anything you do. And duality is a pretty constant thing, right? For everybody likes you, there's somebody that hates you, and if more people like it, it means the people who hate you so much more than people like you actually like you. It's this balance in the universe. And so as a founder, I think you're constantly trying to find that balance. So that's one thing. And in our business, right, we deal with human capital all the time. And human capital is really complex. And the easiest way to explain it was when I was looking to start Nomad, I went to a bunch of trusted friends. I asked them, hey, what do you think about this idea? And normally when I go to people with ideas, you have people like, that's a cool idea. You have a lot of people, probably more so, like, oh, that's a stupid idea. Yeah. Or how are you going to make money doing that? Or why would you want to do that? Or you even care that much about that space? Or is it just a cool idea? Yeah. With Nomad, I got a lot more of like, that's a great idea. That was my red flag. I was like, well, where are the naysayers? But what you realize is it's really hard to build service businesses because you're dealing with just human capital. There's no product. There's a bug in the product and let's go fix it. It's like we have a process and we need people to buy into this as a team and really understand why and what we're trying to do over time. And sometimes you could build processes to help mechanize parts of it, but in the end, it's the people business. And these are people with hopes and dreams. These are people who want to build families. These are people who crappy things are going to happen in their life outside the office, and they have to walk through the door, and you want to tell them, listen, we're not this weird, archaic place where we expect people's personal lives not blend with their work lives. If you had a fight with your significant other before walking through the door, it's real. And that's okay. And we could talk about it. Because I know I am. Right? I was here when I broke up with my girlfriend, and I got a giant group hug because I told everybody, I was like, guys, I'm really upset. Don't worry. It's not the business. It's me and my life, and my life just kind of fell apart, and like, give me a few days and I'll be back to normal. And having that a support system based on real relationships, authenticity matter. And it's a really powerful thing to go through.
Yeah. And lastly, to wrap it up, for those founders out there, like, what are the last few pieces of advice you have? Any stage, anything that you kind of look back on that you're like, I wish someone told me that, things like that.
So one, no matter who you use, internal, external, you can't just rely on the person to do their job. You have to have at least a peripheral understanding of their job they're doing and why they're doing it and how to hold them accountable. Right? That's finance, marketing, sales, development, right? That you're just not handing them off, because that's where failure comes in, and you're holding them to agreements, right? If it's somebody internal, what are the goals you're setting? If it's external, what are the goals you're setting, and are they hitting those or not? And I've definitely made that mistake, and I know lots of founders who've made that mistake. When you don't do that, you elongate failure, right? And the worst thing you can do for anybody is put them in a position to not succeed and then stretch that out, right? Like, pull the ripcord when you can and when it makes sense. And I think that's definitely something that I think people take for granted. If people come to us and they use this finance, I don't want them step away. We don't really let them step away, right? We send them into a month, hey, here are the things we need answers from you on. Now here's a draft version of your financials, and let us know if it's accurate, right? And let's have discussions around these things. But you definitely can't just hand it off and walk away, or have that expectation that you can, or you're going to be incredibly disappointed. That's not what running a business is, right? There's a lot more requirements. So I think always going through that process and having that expectation is one. A lot of times early on as a founder, we're probably tight on time, so I'm going to wrap this up with this last point. A lot of times you get desperate to hire, and then you make a mistake on hiring, and then you also have onboarding, right? Never hire anybody out of desperation. I know as a story from Tony.
This is the siren.
This is like the wrap up. So I'll wrap this up soon. So guys, the alarm works here. This is like the 8th time this week. I think they've confirmed it works. So Tony shaped Zappos. They would hire people into their customer sales role, the customer service roles, and you'd have tens of thousands of people apply. A lot of people wanted these jobs. And one of the things they would do is after you finish their weeks of training is they'd offer you thousands of dollars to walk away. And they knew that if you took the money, you were in it for the wrong reasons. They wanted people who were in it for the right reasons to work in this culture, to be this amazing customer service representative. And that was a sign. Never hire people out of desperation. You're going to build a bad culture. They're not going to work out. And those failures, here's the other thing, from a math basis, it was much cheaper to pay somebody $3,000 to walk away than the minimum, I tell you this is a real number, for any business, the minimum $25,000 you're going to spend for a wrong hire. And the math comes out a lot of things, and if it's a really wrong hire, especially if you consider opportunity costs, it costs you hundreds of thousands of dollars, if not millions of dollars. Think about that. So you can't hire people out of desperation. There's no growth worth that. And the other end is, once you are bringing people on, you got to invest time in onboarding. You got to put metrics in front of people and expectations and goals and growth, and like get them comfortable, then let them run. But if you don't get your recruiting right and your hiring and your onboarding right, you're really, really going to struggle.
No, thanks for all of this. I think it's really helpful.
So we clearly got this place
until next week.
Super hot, on fire.
Yeah. So until next time, thanks for joining, guys.